So, hey, Laura, how are you, love?
Hello, hello.
How are you?
Good. I didn't know if I was going to get to jump on today. So excited. I have
Yay.
yeah, opened up a little Sunday clinic to get everyone in. So
Nice.
have a little break here. Yeah.
You're
How's
in
it
your space
working?
right now. Looks beautiful.
Yes, nice stuff. How's everyone's Sunday going?
We're good.
Great.
Yeah. Okay. Well, Dan and Nick, do you guys want to start and take it away?
Sure, absolutely. Am I
Is it
able to share my screen now, Shakira?
the event? I'm so bad with where do you go for that? Just so that.
Let me just try to share, and then I believe it'll send you a request if I'm not. Yeah. So I'm about to send you a request,
Perfect. There we go.
and you should be able to accept it. There we
Well,
go.
so really quick before we start, I just want to introduce these guys. So I met Dan in May of 2024, I think it was, right? At the Accelerator Conference.
Hmm.
And the Accelerator Conference is a conference that Tiffany Hall puts on for all, like it's just all business. So she has all kinds of business companies that can help the aesthetic market. And he just killed it. And so after that, we've kind of maintained conversation. I love that he specializes in the aesthetic space. And I love that they are like an all-encompassing accounting firm. They can do all the things. So they do, and you can jump in here and correct me if I'm wrong, like you guys do bookkeeping, accounting, tax. You set people up for like tax write-offs and even buyouts, right?
Yeah, exactly. So we're basically your outsourced
You
accounting
guys-
tax service. So we sort of do it all from the bookkeeping to tax advisory consulting. So yep, you're right on. And we had a couple clients in the past year sell their practices and help walk them through that process and guide them along the way and support them from a financial standpoint. So we've worked with startups, we've worked with those exiting. And everything in between. So yeah, we've grown a lot of experience in the medical aesthetics space, and that's what we're hoping to do is help folks manage their accounting and financial situation.
Yep. And
Yeah,
we're
and
happy to talk more about the buyout too. If I know that's sometimes of interest in this space and what that experience looks like. So,
Sure.
yeah, and this is going to be like they're going to do a really quick and dirty PowerPoint slide of just the
mhm.
basics of what you should have or be thinking about, whether you're an injector, aspiring business owner, or an existing business owner and wanting to scale. Like, what are the things that you need to have in your practice and be set up for success? And then after that, we're just going to release them to you guys. So you guys pick their brains. They're here to answer any questions for you. And then they have a special treat at the end for everybody that comes on board. So take it away, Dan.
Awesome. Well, thank you. I'm going to share my screen, so just let me know when you see something come up on your screen. And hello, Jocelyn. Good to see you.
We
Thank you for
can see
joining
it.
us. You can see it. All right, let me blow it up a little bit. All right, are you seeing it full screen now?
Yep, you're good, Dan.
All right, perfect. All right. So thank you, Shakir, for having us on. Thank you for joining us today. I know on a Sunday, late on a Sunday, it's not only always the most exciting thing to get on and talk about accounting and finance and things like that. I'm sure that sometimes it gives people anxiety if when it comes to running their business, but we hope you take some wisdom, take a little nugget of wisdom out of this presentation. And by the end of it, find a little bit more comfort and peace of mind around your accounting, finance, bookkeeping, and tax situation. So we'll jump right into it. We're Liguori Accounting. We are just set up this presentation, talk about the aesthetics of accounting, and I'll leave it to Nick to give a quick introduction of himself.
Sure. Yeah, so my name's Nick Ligori. I am the founder of Ligori Accounting. We've been in business about 5 years, going on year six here now. And we've specialized in medical aesthetics, accounting over the last few years. providing outsourced accounting to med spas and medical aesthetics practices. And I'm a CPA. We're located in New Hampshire, and we serve businesses across the country at this point. And we have a small team of accountants, but we provide a very tailored service to our accounting clients and in the aesthetics industry. We came into this space sort of organically. One of my earliest clients that I worked with was a med spa locally here in New Hampshire, and found it was a great fit as far as the services we provided. Bookkeeping, accounting, understanding their financials, help on the tax side of things, and they referred us to other med spas in the area, and we really felt like we had a good fit with how we served them. So we decided to focus in this space and expand, we became part of AmpSpa and, have done events in the industry, and it's been a great fit over the last few years as we've grown in this space. So that's a little bit about Liguori Accounting.
And I'm Dan. I do
Go
business
ahead, Dan.
development for Liguori Accounting. I am in Nick and I are both actually in the New Hampshire region. We're headquartered in New Hampshire, but we have employees all over the country and clients all over the country as well. So my background's a little different. My background is, like I said, in business more generally. So I took some accounting classes and I have a lot of accounting experience, but I'm not a CPA. So I just know a lot and I can talk a lot about it. So we live in New Hampshire. We got a great team built around Liguori Accounting, and small but mighty, we like to say. That's really what we're going for. It's a boutique experience. They're highly qualified professionals, so we do a lot of vetting before they come in as well. And we love the team we work with. And just on a personal note, we both have I know it helps to grow in reputation when we and connect with the audience if we give someone a little personal. We're both from New Hampshire. We have large families here, so Nick has 4 kids. Large. I mean, Nick has 4 kids. He's beating me. I have about 3 kids, and so we're busy not only on the business side but on the personal side as well. Awesome. So a little bit more about us, Nick. Can you dive into a little bit more of the history and then what is outsourced accounting?
Sure. Yeah, so I gave a little background about how we get into the med spa space. And really what we do is provide an outsourced accounting service to med spas. So what that means is think of it as we're your outsourced accounting team. So, in a bigger company, you'd have your accounting department. We're like that, except on a smaller scale for smaller businesses. So we handle everything from bookkeeping day to day, handling the bookkeeping aspect of the accounting needs. We do tax planning and we do fractional CFO support as well as tax filings. So that includes everything from payroll, sales tax, whatever it may be that you need on the financial side of things. And what separates us is one, the fact that we are a full service solution. So we do the bookkeeping, we also do the tax advisory side versus having a person that does your bookkeeping, a person that does your taxes, a person that you're going to for advisory. So we bring that all together into one service offering. And it helps understand the full picture because small business, you need to have that understanding. Oftentimes there's a disconnect between your bookkeeper and your tax preparer, and they don't see what's going on day to day, or there's missing information there. So having that all together really helps us serve our clients in a most complete way, in the best way possible. So above bookkeeping, we do strategic planning as far as from a tax standpoint. So we often meet with our clients on a quarterly basis and plan for taxes, make sure our clients understand what their tax liability is going to look like and help prepare for that or mitigate that when possible. And then fractional CFO support is we're helping dive into your numbers. So the bookkeeping is organizing your financials, and the advisory piece is, okay, what does this mean? What does this mean in my business? How does this help us make decisions? How does this help us move towards our goals or reach our goals or plan to do so? And really, it's about peace of mind. So how do knowing that your books are being handled by a professional team versus, trying to do it yourself or having your sister's brother who, does bookkeeping on the side handle it, gives you that peace of mind knowing that everything is accurate, going to be delivered to you on time, and you're ready for you to make decisions off of. So that's a little bit about what we do. Dan, anything I missed on that?
No, it was great. Yeah, the emphasis on peace of mind, which kind of brings me back into, you're not alone. I think a lot of being a business owner, it can be a lonely game to play at times if you don't surround yourself with the right people. And you might think that these are the only struggles that you have. So I just wanted to address you're not alone. And what are the common pain points that we hear from aesthetic practice owners? And one, no time to manage the books or financial responsibilities of the practice. Your time is immensely valuable. Some of you are open on Sundays, trying to fit in extra clients. Imagine going home after a busy day and then having to tackle the books and finances. We talk through it in what is the value of your time? Think about how much time you're spending managing that, but also if you're managing it, is it being done in a way that will prepare you for tax season, or you can rely on those numbers suitably. And then that goes into the next point, the lack of clarity. These are all things that keep business owners. I talk to business owners constantly about, hey, I don't even know where my business is. Are we going to be able to make payroll next week? I want to grow into another location. I don't even know if I have the cash flow for that. I want to invest in this other piece of equipment. Do I have the cash flow for that? I really want to help, my business grow. I need more capacity. I want to hire a business manager. Where am I? And so it's just the anxiety of, okay, I don't have a strong financial picture because my data might be split in different areas, or maybe it's not organized properly, or maybe you're just not confident. And that's the other piece. Number three is no confidence in the accuracy of the numbers as well. So there might be organized, but you're just not entirely confident that they're accurate. And then for some of the pain points, communicative CPA relationship. A lot of people come to us from that perspective. Again, we're a CPA firm primarily, but we offer this comprehensive support because that was the common pain point we heard is, nobody was hearing from their CPA. If they were, it was just once a year. They weren't having any sort of touch base throughout the year, quarterly, things like that. And then that would lead to an uncertainty about the tax position and opportunity. So tax season can sometimes be the most anxiety driving season, just because, particularly if you had a good year, you just don't know what you're going to be looking at for your tax liability at the end of the year. Am I going to get a big hit? Am I prepared for this? Have I put enough cash aside to be prepared for the big tax bill? If not, how am I going to tackle that and things like that? And if I do have a big tax bill, how do I make sure this never happens again?
Mm-hmm.
And then lastly, just frustrated with the accountant's lack of the understanding of the industry. So that speaks to the specialty and why we decided to jump into this specialty. Was we were getting a lot of feedback from aesthetic owners. Is like this, they don't understand gift card membership packages. They don't understand the vendors. They don't understand anything that's coming through. And we need somebody who knows these things and is capable of handling them. So no, you're not alone. If any of these things keep you up at night, perhaps it's time to look for a partner that can help. So how does it all work? We kind of wanted to take it back to the basics of how do these things feed into each other, and how do we build off of it? So when we're talking about bookkeeping, the primary thing we use is QuickBooks Online. That's this center icon here, QBO. And so all these places feed financial data into QBO. So you have your bank, you have your POS, which is sometimes integrated with your EMR, and then payroll as well. So all those things are feeding into QuickBooks. All that data is feeding into QuickBooks. And then people like us organize it, ensure that it's solid for when it comes to tax season. So everything's done in compliance with the IRS requirements, as well as making sure it's accurate as possible. Your sales data is in there, it's coming through accurately from your EMR, whether through a manual journal entry or an automatic feed, however you have it set up. It's really making sure that that data in QuickBooks is up to date with your sales data, your payroll data, your bank data, and it's all seamlessly coming together.
Now, John, can I ask a question?
Yes, absolutely.
Only because I get it all the time. So, let's say I'm a brand new like business owner or starting to do a small like testing the waters if I want to open up my own business. How do I even open a QuickBooks? And how do you guys get into QuickBooks? How does that work?
Yeah, that's a great question. So, QuickBooks, you just go online, you can sign up for, they have, it's almost like a subscription. It is a subscription service. So you just pick your tier of subscription. Typically it's the essentials package is sufficient for everybody, or mostly everybody. You sign up, fill in your information, and then you hit the ground running. You connect your bank feeds to this, and you connect all your systems to this, or you get your data flowing into the system. And then from here, it's as simple as sending us an invite via email. So if you want us managing it or an accountant managing it, it's just
I
going to
do.
settings, users, and just plugging in an email and sending us an invite. So, and then we have access to the QuickBooks.
And then QuickBooks, if you join it with your bank, some banks give you the possibility to look at bank statements. So it's something that's easy that once you
Mhm.
guys are managing the books, you guys just take over, reconcile accounts, and if there's any
Yep,
questions, you can give P&L monthly statements, correct?
exactly, exactly. So on a monthly basis, we go into QuickBooks, and we reconcile the account, we categorize everything in the bank feed, and if there's anything we're not familiar with, then we'll just ask a question on how to categorize it, way to put it, and then we'll make sure that the payroll data is coming in accurately. So we check that because sometimes there's a disconnect. So we do payroll tieouts, they're called. We go into the EMR and we pull the data from your reports, your sales reports there to ensure that on your P&L, which is the profit and loss, it displays and it breaks out the income exactly as you want to see it and has all the other data included there accurately, like fees and things like that. So there's a lot of little nuances that come into play when it comes to managing your books beyond what you think about when it's not just bank stuff coming in through your institution. It's really there's data actually in various different places, and we utilize those systems to ensure that the books are as accurate as possible.
Yeah, and just kind of along those lines, I want to jump in and talk about some of the common errors we'll see in books and on the books for people, whether it's someone doing it themselves or whatever the case may be. But for one, payroll is a big one where oftentimes what's getting recorded is just the payroll withdrawal. So whatever is actually coming out of the account for payroll versus getting it split between the actual gross payroll amount and like the wages paid versus the taxes that are being paid.
Oh,
So
wow.
it's important that those are split out. And usually what's coming out of the bank doesn't actually reflect that. So that's one thing that's an area that's often mistaken. The second big one would be loans. So breaking out loan payments into principal and interest, or, oftentimes we don't even see loans recorded on the books, but we're seeing payments against them happening or coming out of the bank. So that's another one where things are missing oftentimes. Fixed assets. So when you're buying equipment, those are getting recorded on the balance sheet and then depreciation recorded against that. So that's another common thing that's missed if you're just recording what's coming out of the bank. And then the last big one is the data from your EMR, the sales data. So generally what you're going to see is just deposits coming in, but there's another level of detail that needs to be broken out from that information. And that's oftentimes there's going to be gift cards, package sales, cherry or other financing options. So there's a number of different moving pieces that are getting wrapped up into those deposits that need to be split out on the financial statements for them to be recorded properly. So, um, and that's some of the nuance that we can help with because we're familiar with the industry and what happens on the EMR side of things versus just kind of deposits coming in that may not all be revenue. And if you don't sort of know the detail behind that, it's easy to overlook. So those are probably the most common few things we see or errors we'll see on the bookkeeping side of things. And they're important because for one, just from a compliance standpoint, when you get to tax time, those things need to be recorded properly to have your taxes filed correctly. And then, when you're getting it, if you need a loan from the bank, having accurate financial statements are important at that point. And then, further down the line, if you are ever looking to sell or merge with another practice or anything along those lines, having accurate and, up-to-date financial statements are hugely important in any of those situations.
Yeah, and that's the benefit of working with a CPA firm as well, is they have an understanding of that piece as well. It's not just, hey, this is a bookkeeper generally might not know those things as well. So the CPA will know that. And then this is all very tactile, very technical. It really what this is meant to do is to inform the next step, which is the strategy. That's key, especially when it comes to scaling and growing, right? This data informs tax planning. This data informs any sort of fractional CFO work where you're doing strategy around cash flow, where you're doing strategy around looking at your forecast, your future years to see what the business profitability looks like and things like that. And how do I, if you are planning to exit, how do I exit well?
All right, so what does success look like when you're talking accounting, bookkeeping? So things you ideally want to be doing is meeting with a financial professional on a monthly or quarterly basis to help you understand your financial picture. Personally review your financial reports on a monthly basis, updating your tax strategy on a quarterly basis, and keeping your books separate if you have multiple entities. So this is a common thing we see too, especially with MSOs in the space, where you need to have two separate sets of books. Or another scenario is you own a piece of real estate that your practice operates out of, and those also need to be separated, what's happening in the real estate entity versus the business. So those are a couple areas where you want to make sure things stay separate. Things to avoid. This is the most common is mixing personal and business expenses. That's something we see all the time, so it's important to keep those separate. Doing the books yourself, even if you are a proficient accountant, if you're running a practice, it's not the most efficient use of your time. It makes sense. That's an area that makes a lot of sense from a dollars and cents and time standpoint to outsource. Number 3 would be tracking everything on spreadsheets. Again, it's possible to do it, but it's very easy to miss things or overlook items there versus using a system like QuickBooks Online. That's going to make sure everything is captured and gives you the processes and procedures to stay on top of things. And then lastly, relying only on your EMR as a sole source of financial data. This is definitely an important component, understanding the sales, operations, revenue side of things, but it's not a complete picture necessarily. So it's important to have a full set of books. And as we said earlier, QuickBooks is what we would recommend in that area.
Now, let's say, can I ask a question, Nick?
Sure.
When it comes to mixing personal and business financials, because I know I did
Mhm.
this in the beginning and it was a good thing. I think a friend of mine told me about it and then I confirmed it with my CPA. Let's say someone's starting out, they just open a business checking account, but
Yep.
they're utilizing maybe just like for example, I am an American Airlines whore. Like I love American Airlines. But the business credit card with American Airlines sucks. So
hmm
I do the personal one, the one that gives you like access to the lounge, but I
Yep.
strictly only use it for business. Can you
Sure.
guys talk about that? Like, how does that work when you're utilizing like maybe a personal card for strictly business? Um,
Yeah, I think that's generally fine. I think it's keeping the account activity separate is the biggest key. So it's like you don't want to use that card for sometimes business, sometimes personal.
right.
If it's a personal card and you're using it exclusively for business and that's how you're recognizing those transactions, that's generally okay. There's usually no issue with that, but it's really just mixing in the same accounts that's the
Yeah.
biggest problem. Yeah, good point. Right, and really this is our last slide here as far as um, detailed info goes. So in a MSO model, what are some of the important aspects to be keying in on. So one, ensure your accountant understands your MSA. So understanding that agreement between the MSO and the PC entity is important to know how things are supposed to operate, the funds are supposed to flow. Next is keeping separate sets of books for the two entities. Oftentimes we'll see that just one QuickBooks and both entities' accounts are in there and everything is mixed together, which is non-ideal and non-compliant in most cases as well. So it's important to have two separate sets of books, which adds a complexity, but the MSO model itself is fairly complex. So it's important that you're having those separated and taking the steps to be in compliance with your MSA. Using a professional to consolidate financials. So as much as they need to be separated, it's also important from an analysis standpoint to look at them together because really they are interconnected and interwoven as far as the practice and the success of the practice. So being able to see them both separately but also consolidated, the two entities' financials is important and beneficial. Partnering with a knowledgeable and trusted MD. Often in most states, the MD has to own that PC entity. So having someone you trust and understands the model is important as well. And just ensuring proper flow of funds between the two entities is key. In most cases, revenue needs to flow through the PC, the physician-owned entity. And there needs to be, the MSO is providing service to that entity, and there needs to be an invoice and a bill basically between the two for that management service fee. So that's pretty common, but that proper flow of funds is important. Payroll is another key where certain payroll needs to be separated between the two entities, which can get mixed up as well, which can be non-compliant in certain cases. So things to avoid is combining the books into one QuickBooks account. So we want to avoid that. Again, mixing personal and business expenses within the MSO. Using the wrong EIN for sales and tax filings. So making sure that the revenue is flowing to the correct entity is important. And then when you're filing sales tax, that's another area where it needs to be done through the proper entity. And working with an accountant without experience or understanding of this model is another thing to avoid. Obviously, most accountants should be able to understand the mechanics of this and how they should be filed. But if they aren't experienced or aren't looking at that MSA, there's definitely going to be things that are missed or processes that are missed or the nuance of this model with a CPA who isn't versed in this structure. So important to make sure your accountant has that understanding if you're structured this way. And that pretty much wraps it up as far as
That's some.
content we wanted to hit on. So Dan, go ahead.
Yeah. So, all right, where do we go from here? We wanted to provide, if you have your phone out, I know the cameras have the QR feature now, or you have your separate QR app, whatever you prefer to do, I would scan it. If you don't have an opportunity to scan it, feel free to text or call that number through the work week, or you can send me an email and I can share this information with you. It's simply a link tree with educational content, more videos to go off of podcasts we've been a part of, educational things we've done with AmSpa,
Okay.
things like that, and then ways to get a hold of us as well. And content like there's a helpful resource for KPI tracking. So if you are looking, if you feel confident in the accuracy of your data, then jump into it. There's an Excel that can kind of help you assess the financial health of your P&L, your profit and loss statement, to determine where you are financially and where you fall in roughly in terms of the general metrics of the industry. And then as well as some more detailed KPIs based on like provider performance and things like that. So thank you. I hope there's a lot of good content there. Shakira, I don't know if you want me to make the announcement now of the offer.
Yeah, do it.
Okay. All right. So if you want to take advantage, if you've been with us, if you watched the video, if you've sat through this accounting presentation on a Sunday, if you made it through, we are happy to provide up to an hour long meeting where we would answer any sort of questions. If you want to forward your profit and loss or your balance sheet statement, we'll do just a quick review of those, and in the meeting, we can actually use that spreadsheet, which I told you now have through this QR code. And we'll do just a quick assessment to see where you're at. We may not get into the provider level detail unless you have that readily available, because there's more reports that we need to make that assessment. But profit and loss, balance sheet, happy to look at it. If you have any tax questions, burning tax questions, if you want to get a second opinion, maybe you have an accountant already and you just need a second opinion, utilize that hour-long session with a CPA to answer any sort of those financial tax questions, industry specific questions. So I hope you take advantage, and then happy to be a resource to you and Shakira's community.
What a treat. Oh my gosh, thank you guys. That's an amazing opportunity. Okay,
Absolutely.
well, you guys who are on right now, please feel free to unmute yourself, like turn on the video. Nick and Dan are willing to answer any questions you guys might have specific to your business. And this doesn't count towards the hour, so take advantage.
Yeah. Clock's ticking. No kidding.
Yeah. So please go ahead and feel free. They're amazing, like super easy to talk to.
Yes, especially being a small group, if you have any specific questions or happy to dive in.
Jocelyn or Laura, do you guys have any questions?
I'm not going to take up the time. I'm probably going to do a second opinion or book a consultation. But the one thing
Sure.
you were saying with the airline, so let's just say you have a long flight, you booked it for a personal reason, but then you need Wi-Fi so that you can respond to your patients during that time, but it's on your card. I mean, that's like a little thing. That's not even a big deal, but I was just thinking
Yeah, I would say that would qualify as a business expense if you're paying for that Wi-Fi so you can for business use.
yeah.
Yeah, definitely.
Yeah.
Out of
Lauren, do you have any
curiosity.
questions left?
Oh, go ahead.
Yes, I have been working with a group that AmSpa and Beardetto recommended probably about 2 years ago, Beard Harris. I feel like I pay them a lot of money and don't get a whole lot of out of it. So I'm excited for something smaller. So I'm definitely going to give you guys a call to
Sure.
answer all of, yes, fun little questions. And I felt like it's time for a change. They've been great. And I can sleep easily at night knowing that, yeah, a lot of all of the bookkeeping side of things and CPA side, but I feel like still kind of lacking in some tax planning strategies
Yep.
after recently bringing on some newer equipment, making sure all of that's properly depreciated there. And just looking at, I have been a partnership, but I think it's time to change over to an S corp. So
Okay. Yeah.
guidance and conversation there. Yeah.
Sure.
In the
Yeah,
future.
we'd be happy to dive in a little deeper and talk about your situation and how we could potentially be a resource.
Yes. So
That's a
all good stuff and things are going well. Just some growing pains and needing help
Sure.
navigating that as I bring on more 1099s and employees.
Yeah, that's awesome.
Laura's
Good
killing it.
problems to have.
That's a good question. Can you talk about like when you start out, you obviously want to start out as an LLC. When do you transition your MSO to an S corp? And I just found out there's a deadline for that.
Yeah. So there is a deadline and you can make retroactive elections so if you wanted to do it for January 1st, 2025, technically you're past the deadline. It's March 15th would be the deadline to elect S Corp status for the beginning of this year. But there is a provision where you can file a retroactive election. It has, you have a separate piece of that filing you need to do in order to request that election. But most of the time the IRS accepts it. It's usually not an issue. So that's one piece. And when it makes sense to do that is really circumstantial, I would say. Oftentimes the triggering event is hiring employees. So if you're a solo and then you get to the point where you're hiring an office manager, other injectors or estheticians or whatever, other providers, oftentimes that's the case where it makes a lot of sense. And usually there's profitability too is a key. Like if there's profit, you're paying yourself a reasonable salary or taking home at least basically a salary from the business. Um, an S corp allows you to optimize how you're paying taxes and how you're paying yourself. So with an S corp structure, distributions from the business are not taxable or are not subject to self-employment tax or payroll taxes. Whereas in a partnership, all your income is subject to self-employment tax potentially. Under a single member LLC, same thing. And a C
That's
corp
like
would be the other
30%
structure.
tax, right? That's like 30% tax is pretty high, right?
Yeah, so the self-employment tax is 15% on top of your regular ordinary income tax. So if you're in a 20% tax bracket, you have 20% plus 15%. So,
A
I
lot.
mean, it adds up quickly.
Yeah.
If you're paying yourself through payroll, you are paying that same tax essentially. It's just part of it is paid by the business, part of it is paid by the employee. So the business side though is deductible, whereas self-employment tax doesn't quite happen that same way if you're paying it, on a Schedule C or under a partnership. So there's some opportunity there to have some tax efficiencies the way you're paying yourself. And the biggest thing is really from distribution. So if you're taking distributions as an S corp owner, those aren't subject to self-employment tax, and that's the biggest opportunity for savings there potentially.
Mhm. That's what I feel like I'm getting double taxed, and yeah, that it's
Yeah, how many partners are in the partnership, if you don't mind me asking?
yes. And so mine's a little bit of an interesting situation. My father is family practice by training, but more functional and wellness and aesthetics now. And so
Okay,
he owns 51%, I own 49% here in the state of Texas, where physicians still have to be majority owner.
right.
It's the
Okay,
two of us. And he's
gotcha.
very generous. He does not take any distribution. So it took some interesting, yeah, wording and getting all of that set up with the right lawyers and people
Gotcha. Okay.
where it doesn't look like I'm just taking everything and yeah, not telling him. Yeah.
Right. Right. So yeah, as long as the partnership agreement spells that out, then that works. But yeah, I mean, an S corp might be an interesting thing to explore,
Mhm.
especially if he is not taking, right, if he's not taking distributions and it's really just sort of the ownership piece. Yeah, that might be a good way to optimize your tax situation and potentially his too. So, um, but yeah, worth another conversation, I would say.
Yeah. And how is y'all's pay structure set up? Is it a monthly fee? Do y'all have different options?
Yeah, so we are do a monthly fee. So it's a subscription based on the tier of service that you're working with us on. So our most basic is just sort of a bookkeeping compliance package. Above that, we roll in quarterly advisory and tax planning. And then sort of our gold tier of service is meaning monthly, it's monthly advisory tax planning. So it's really hands-on if you're in a sort of a growth mode or really need that hands-on help from a financial standpoint. The only things, I mean, generally the one thing that's separate from that is tax filing at the end of the year that we bill separately, but all the monthly services or and other items are a fixed fee.
We can get into that a little bit more if you desire to explore it. The first stop would be talk with Nick and get a second opinion or get a consult, and then there are two more sessions after that. So our journey looks like discovery call where we get to learn about each other, and then what you kind of know a little bit about, and then the options call is where we get into the detail of what Nick specified, so you know exactly what's included and what we'll be doing.
I have one more question. So, since you're out of state, do you have someone that works on the business side? For example, I hired a new CPA team, and I had my old one had set me up as a sole proprietor, and then I switched to an S corp. And so I basically
Mhm.
had to close my business, close my bank accounts, and then go in and retroactively close in Virginia. And then anyways, it's a lot. But do you have someone that would be able to look into the state regulations and kind of know what to do going from there?
As far as
Complicated.
from a tax side of things, or
From tax, just business standpoint for like when they closed my business, they said that I owed for the withholding tax, even though I didn't have any employees because I was
oh, you're registered in the
yeah.
state. Yeah. Yeah, so we can often assist with that. It sounds like it's probably on the payroll tax side of things, which often gets met. Are you using a payroll service?
So I started with one, but I'm planning on opening a business soon. So I'm trying to get this all set up. And the only person
Okay,
I had was my son, who helps with client services and that kind of thing. So
gotcha. Okay. Yeah, so if you're using if you're running payroll, I would recommend using a payroll like a third party, whether it's ADP or Gusto are the two we often recommend, Paychecks, whatever it may be. Um, and they're going to help make sure this setup, they'll help you with that state setup. So whatever state you're registered in, you have employees in, they're going to make sure that state compliance piece is taken care of. That's the nice thing about working with those type of payroll firms is that they handle a lot of that as part of their service. We aren't payroll specialists, but we often run payroll and assist with payroll compliance issues for our clients. Um, so happy to help. We can help sort of interpret notices from the state or whatever missing filings may need to be handled to get you, you know, compliant. We can assist with that. Our team can definitely help.
okay, thank you.
I love Gusto, Jocelyn. Like, I've been using them for probably 3 years, and anytime I bring somebody on board, they're like, "Do you want us to file your state new hire?" And I'm like, "Yes.
Yeah.
Do it for me. You do all the work." And then they have a scheduling option, which I think is really nice. So you can have your schedule, your timesheets, your PTO, your sick leave policies, like everything, and it just calculates it for you.
Okay, good. Yeah, I'll look
Yeah.
into it.
I use Gusto personally for our firm, and we often recommend it. It's because it is, like you said, it's super user friendly. They handle everything from, start to finish on the payroll side. So yeah, it's a good option.
Yeah, they offer benefits, workman's
Mhm.
comp, like it's a one-stop shop. So I don't
Yep.
think about it. I'm just like, you guys do it.
Great.
Good. Thank you.
All right, Nick, can I ask you guys a question just for those that are going to maybe be viewing later, just because I know that we have injectors and some of us are injectors and trainers. Like for me, I have my company, but then I also have a separate company for like my training, and that one is just an LLC. Can you talk about like even if you're an injector, maybe you do trainings on the side, you're a trainer for some pharmaceutical companies, what are some write-offs, or how should you structure that company to optimize your tax write-offs so that when you're doing your 1040 at the end of the year, you can draw tax write-offs from all these companies?
Yeah, it's great question. It depends, obviously, of course, on each specific situation. But I think one of the biggest things is making sure you're tracking expenses that are related to each different activity. So if you're doing, if one of your business activities is trainings and you're working for those other companies and they're bringing you in to do trainings, making sure you're tracking any travel expenses, meals when you're out, or whatever those peripheral costs that come up are. Um, it's tough with things like that where it's you that they're paying for, or that's what's generating the revenue. There's often not a ton you can do as far as write-offs, but those things like travel, any other costs that come up associated with it are the biggest things to make sure you're tracking. If you're driving somewhere, mileage is important to be tracking as well. Um, and those are the biggest things. It's one of those things where planning is sometimes the biggest benefit or the most advantageous thing you can do is planning throughout the year. If you do $20,000 of trainings and, there's minimal write-offs, that's going to have a tax impact at the end of the year. So if you wait till January to look at that or April to look at that and figure out what the tax impact is, it's going to hurt a lot more than if okay, planning on a quarterly basis, you're taking that and saying, this is how much tax is going to be owed on this income. Let's set it aside or make an estimated tax payment throughout the year to mitigate that as you go. So um, oftentimes there's not, this secret silver bullet that people don't know about a lot of times on the tax side of things. Obviously, there's ways to optimize your situation, but the most important thing is often planning and preparing ahead of time. Um, so that's, I guess, the my 2 cents on that.
And speaking of planning, at what point would you recommend an injector that is getting like paid on the side, whether that's private training or training from another company,
Mhm.
or maybe they're a 1099? At what point should that injector convert that LLC to an S corp? Because like I just had to run into that last year where I was like, wait, what? I'm paying how much because of all this training?
Yeah, so setting it up as an S corp is
Can you
really
do
going
that at
to
any time?
You can do it anytime, but there are other compliance things that come up once you do that. So you have to pay yourself payroll. You have to pay yourself wages through the S corp once you make that conversion, which has to be reasonable comp from the IRS standards. So that's a situation you need to monitor. There's a separate tax filing for an S corp, so it's no longer on your personal return. So there's a few administrative items that you have to weigh the pros and cons of it. Like if there's only minimal benefit you're getting from that conversion, is there really a good reason to do it? Like sometimes the answer is no, just because the additional administrative costs that come along with it. So often I say if you're a solo, unless you're bringing in, I would say over 100K of profit, it probably doesn't make sense to go to an S corp. I'm just throwing that out there. That's not a hard and fast rule. That's just in my opinion. Like that's when you probably want to start thinking about it. The second trigger would be, do you have employees? If you've hired other employees, then that's yes, like it makes sense to start looking at an S corp. Beyond that, if you're doing a small amount of trainings or it's, sort of just extra income for you, it probably doesn't make sense. Um, so yeah, that's sort of my approach to it. Some people are much more aggressive, but you're also exposing yourself to risk if you're going to be really aggressive of taking the stance of S corp and paying yourself very low income to take that tax benefit of avoiding the payroll taxes. There's some risk there. Um, and that some people are more willing to take that than others. But our approach is probably a little bit more conservative, because we want to set our clients up for success and want to mitigate that risk for them. So,
And just to clarify, when you say, pay yourself, it means like if I'm a PA, most PAs in most industries get paid anywhere from, let's say, it's 75 to 150K. So
mhm.
the salary for that S corp should be that paid out to me, correct?
Right, exactly. Yeah,
Or
you want to
or
look
full-time versus part-time, or something like that.
right. Yeah, you would sort of prorate it if that was the case. But yeah, you want to pay yourself what you would have to. I like to say like reasonable compensation. Easy way to think about that is what would you have to pay someone if you were going to hire them to do your job?
Yeah.
So.
And then another question that I know Patreon members ask is like, what is considered a tax write-off if you, let's say, have your own LLC for training, or you're a 1099 and you get contracted, or maybe you own your own business and you have a phone and you post on Instagram all the time and you're answering calls like we do on a Sunday, or emails, or you're on the EMR, like, or you're traveling to a training or traveling to a conference. Can you write off the whole travel? Is it only the day before or the day after? Like, can you give us a quick summary? I know we only have 10 minutes, but just those are some
Sure.
basic questions that I think I get asked, and I had asked my accountant in the beginning, like, what
Mhm.
what can I write off through the company, or how do I submit that write-off?
Yeah, so the phone side of things, if you're using a separate cell phone for business, then yes, you can definitely write that off. If not, and you're using that cell phone for personal, technically you cannot write that off. Sometimes you could take the approach of allocating it, but that's hard to justify because you're going to own that. You're going to have that phone regardless of if you had the business, right? For personal. So separate phone, then yes. Um, if you have a dedicated business line or any other dedicated business cost, like an EMR, if you're paying for an EMR, of course, that's a write-off. Um, any softwares, like if you're using a software to post online or another system to automate that or help facilitate that, then yes, that type of expense would be a write-off. Traveling for business purposes, if you're traveling, travel to and from an event, um, those are definitely deductible costs. If even if you're going early, those costs are still deductible because the purpose of the travel is the event. So if you went the day early, you're there for a day personal, that's fine. That flight had to happen either way to get to the event. So that's deductible, and then obviously the returning flight as well would be. Um, and trying to think what other scenarios are common. The one thing that is not deductible to pay, which often people overlook, is travel to and from your place of employment. So if you're a practice owner and you're driving home to your practice, those are not deductible miles. Commuting does not count as deductible travel from a business standpoint. That's something that's often overlooked or mistaken. So that's one thing. But if you're traveling to a training, driving somewhere like that, deductible for sure.
What if you're starting out your business, and I'm asking all the questions for the people in the future that are listening
Yeah,
to.
sure.
But what if you're starting out your business and um, we got a late comer. What if you're starting out your business and you're like working out of your office in your house, and obviously maybe you're in a room somewhere, you're subleasing a small space, but most of the admin stuff is from your home in a 9 by 10, I'm throwing out numbers, 9 by 10 room, and you're using your own personal Wi-Fi and internet to log on and do admin work. Can you invoice the company for that expense?
Yeah, so depending on the structure and the setup and whether you're a 1099 or the owner of the business, there's definitely an opportunity to deduct those expenses. One way is through the home office deduction. If you have a space that's dedicated primarily for business use, you can allocate, usually it's a square footage allocation. So if, 500 square feet of your 2,000 square foot home is the office, you can allocate that percentage of all those shared costs. So internet, phone, utilities, rent, mortgage interest, taxes, all can be allocated to the home office deduction. So potentially there's a decent write-off there. The other scenario you mentioned was a rent. If you're using a space for business purposes, you can potentially charge rent. You would almost generally need to do a similar calculation of what that actual cost as a percentage of the overall costs are to determine what a fair rent would be. But yeah, you could do it either way depending on the structure and scenarios there.
Okay. Do you guys have any questions? Jamie, I know you came on here at the tail end, but Dan and Nick just finished a really quick PowerPoint presentation and they're just now answering Q&A. So if you have any questions for them, pick their brains for sure. Hopefully she can hear me. Jamie, there she is.
Hi,
Oh,
sorry, I was totally tied up, so just coming in late.
oh, anytime. Yeah. Do you have any questions for them regarding accounting or?
Um, I think my biggest thing as a business owner is just trying to figure out how to minimize, of course, overhead expenses and maximize what we can write off, I guess, or how to be creative with that but keeping legal. I think that's, the business expense part of it. Is there too much that we can write off? Like, let's say I bought the Optimus platform this year. And my accountant is telling me that we should kind of spread that out over 5 years, kind of as a depreciating
Yep.
type of thing. Okay. I just
Right.
want to make sure that
Yeah,
I'm
so
getting.
there's a couple options with equipment, and you do have to look at the overall picture. But one would be depreciating over 5 years, like you mentioned. And the other is taking bonus or accelerated depreciation, where you could take that deduction all in the current year or significant portion. So that's something really you would want to analyze. You have to look at the present situation, but also think about the future situation. Because if you take that deduction all in year one, then you don't have it from years 2 through 5, right? So you have to look at the pros and cons of that. Like a bird in the hand, obviously, is something if you can reduce your tax liability significantly this year, but where does that put you next year or the following year? So yeah, I mean, it helps to spread that out because that's a pretty significant deduction over 5 years that you can take. And the way the tax depreciation works is it is front loaded, like the first year, like it sort of goes down. So the first year is a bigger deduction, the second year is slightly less, and it goes over the 5 years. So it's sort of a scale in that way. Um, but there are options to take more in the first year if that makes sense. So it's worth a conversation with your CPA to look at your full picture. It's not a decision that has to be made now. It can be made when you're filing your taxes or closer to the end of the year once you have a better picture of what the year is going to look like from a tax liability standpoint.
Okay.
So it gives you some, any year that you're buying equipment, especially large equipment like that, it gives you some wiggle room, I guess, when you're planning. So yeah,
Okay. Thank you.
sure.
What about the interest on those loans? Are those deductible?
They are, yep. So the interest portion of the payments are deductible over the life of that loan. The principal piece is basically what's getting captured in the depreciation.
Mm. I think that was a good thing I learned too, that the loan interest is deductible.
Yeah, and depending on how those loans are financed, the equipment loans are sometimes a little funny how they're structured.
They're
So it's
horrible.
not always, yeah, it's not very often clear
They're the worst.
what is interest, what's principal, and how that breakdown is. Sometimes there's like insurance or other fees that are rolled into that monthly fee. So it's important that you know what that breakdown is as well. Yeah, because oftentimes it's not very clear from the monthly statement or the loan agreement.
They're the worst. I hate them.
They
So
are
Nick,
tricky.
I have another question. So
Sure.
how much can we deduct in terms of loss? For example, I bought a machine that did not work out for us.
Hmm.
And of course, the manufacturer or the company will not take it back. So I'm trying to sell it. And I want to just, like it was $25,000. I want to take
Yep.
that as a loss. But I also have, we have lost or stolen product in that like annual loss. Is there a maximum or what do you recommend to not draw any red flags?
So the equipment, it, it depends. So did you buy it in the current year or did you buy it previously?
Bought it 2024, July of 2024.
Okay, so do you know how it was depreciated? Did you take like one year's worth? Is it being depreciated over 5 years or was it all taken last year?
I don't know exactly on that machine.
Okay,
I would think we probably took it all just because it's only 25,000.
right. So with that, whatever you sell it for is actually going to be a gain because you've already taken the deduction for it.
Okay.
So, if that's not the case and you just took 1/5 basically for depreciation, then it would be whatever the difference is between what you get for it and what, the purchase price minus depreciation is. So there's a little bit of calculations that have to happen there to determine a gain or loss. But if it was fully written off, then whatever you sell it for will be a gain. Um, and then any product that is, lost, waste, whatever, is all deductible. You can't deduct it twice, I guess. So if you're depending on if you're cash basis or accrual with how you're recording inventory purchases, if you're cash basis and you're already writing it off when you buy it, you can't write it off again once it's used or, you know, lost or waste, whatever.
Okay.
So you can't double count that. But if you're recording it on a accrual basis and it's being deducted basically when it's being used, or cost of goods sold is being recorded when you're actually using the product, then that waste can get written off at the end of the year or periodically when you're recognizing that. So a little bit nuanced there, but really the key is you don't get a double deduction for it.
Okay.
Yep.
Good to know.
What if you donate like a piece of like a laser? Like it's just not working for you. Can you take a deduction if you donate it to one of these little National Laser Institutes or whatever they are?
Potentially, yeah. So you could deduct potentially up to the fair market value
Hmm.
at the time of donation.
Hmm.
So there is an opportunity there, maybe. Yeah.
Okay.
Yep.
Does it
Okay.
need to be donated to a nonprofit or is it any entity?
Yeah, it would have to be to a nonprofit. Yeah, good point, Dan.
Finding me a nonprofit stat.
There you go.
That did make me think of a question. I do a lot
Sure.
of donations to different schools, Alzheimer's associations, kind of a win-win per se, their school charity auctions.
Mhm.
So, I mean, it gets my name out, brings in new
Yep.
people. They cost me a decent amount. A lot of times I'll do a disport party for five, so five women coming together. I know talking to my CPA that I guess the government does not view my time as worth anything. Is that correct? But could I write off the product that I'm using?
Right. So yeah, any product you use could be written off if in that type of scenario. So whatever your cost is can be written off as sort of a donation. Um, so that is one thing, one way you can do it. The other thing is like if you're, you know, doing sponsorships or anything like that, it's sometimes more beneficial for that to be considered advertising marketing versus charitable donations.
Why?
So that's sort of important to look at because, and the reason being is because sometimes, so charitable deductions only can be claimed in most cases if you're an S corp, LLC, partnership, that's getting claimed on your personal at the personal return level. So there's no deduction at the business level. And then on your personal return, you may only get a deduction for that if you're itemizing deductions. If you take the standard deduction, you don't get any benefit from charitable donations. So
Mhm.
sometimes that's a lost deduction, um, depending on your personal tax situation. So it's almost a couple layers deep before you see whether or not you're getting a tax benefit from it. But that's a key area where it's like, oh, this is a write-off, but I'm not actually, you know, if you're taking the standard deduction, you're really not getting any benefit for that from a tax standpoint. So yeah, so that's a little bit complicated to look at that. You have to look at the full picture at the personal level to see whether that's beneficial, which is why if it can be considered marketing advertising costs, if you're doing a sponsorship or whatever it may be, something like that, it's more beneficial because that's a write-off at the business level.
Yeah, that makes sense. Thank you.
Yep.
Awesome. All right, guys. Any other questions?
Last question. Back on what Shakira was saying, because I'm a trainer for
Mhm.
Allergan Advance, but I'm also right now a 1099. I'm considering all of those into one, basically all the same business. Should I be separating my training into a different LLC?
Um, It probably makes sense to do that. You can file two separate Schedule Cs on your personal, if that's how you're set up, if they're both being filed in your personal return. You can have one Schedule C for training and one for the other 1099 income. That can be split out into two different business activities.
Okay.
There are potentially benefits of doing that. Um, and it gets a little bit nuanced depending on your situation. But yeah, most likely it makes sense to separate those out. For one, just from a clarity standpoint, you can see the two activities separate, but two, like, you know, qualified business income deductions, are could be limited if they're combined, whereas on the training side, that may be able to be fully utilized. So it'll be dependent on your situation if there's really an actual dollar benefit of doing that. But
It doesn't hurt anything if they're all
it,
together.
not necessarily. I mean, it depends on the situation. I think you could most likely do it both ways, and it's going to come out the same as far as taxes owed. But from a clarity standpoint and just, proper reporting, it may make sense to break those out as separate businesses.
Okay, thank you.
Especially if you are going to convert it to an S corp at some point in time.
Well, I did.
Oh, you did? Okay. So
Yeah.
the S corp then that's right. So the S corp will be separate. So I
Okay.
would probably keep the training separate. So that's going to be on your schedules, on the Schedule C on your personal return.
Okay, thank you.
Yep.
Well, thank you guys so much for giving us all the knowledge and helping us figure out how to write more stuff off. Makes me think of that, what was it, Schitt's Creek episode where it's like it's a tax write-off. Writes it off. I don't know.
Everything.
I don't know.
Right off everything. Let's go.
Yeah.
Thank you,
We would
Shakira.
love to have you guys back. What would you guys say like would be the optimal time, maybe in the fall, to catch some maybe last minute tax write-offs we can take advantage of before the end of 2025? Like what month would that look like?
Yeah, I mean, probably you're right. Fall would make sense. October, November.
Okay.
Want to give people enough time to make those moves or do whatever they need to do from a tax standing plan standpoint before year end. So I think that's probably ideal.
Okay. So maybe
Yeah.
end of October, beginning of November. Would that be beneficial for you guys on the call?
Yeah, absolutely. I think really interesting for the future too. I know a lot of spas are being looked at by private equity PE, and it'd be cool to kind of talk through why this all matters from like a tax standpoint. We address that heavily here, but why does it matter when it comes to someone looking to buy you out?
Yeah.
Like all these elements kind of play into the due diligence process and are really important to that. So from a tax standpoint, it'd be great. And then maybe another session at some point on what does it look like? Why does this all matter when someone's looking at my business from a third party perspective?
Yeah, I love it. Awesome. Well, thank you, ladies. Thank you,
Thank you,
guys.
everybody.
We will
Of
definitely
course.
schedule you
Good to
guys for
meet
the
you
fall
all.
again. And then I'll make sure I post the QR code so Jamie, I know you got on a little late, but they're giving a complimentary 1 hour session to just review all your books and then your P&L and give you advice on how to how to move forward from that point on. So thank you guys. I'll post the recording and then put your contact information on the post. Thank you guys.
Thank you.
Thank
Awesome.
you.
Thank
Thank
Good
you.
you.
night.
For the rest of your Sunday.
Hey.